Al, it actually feels wrong to brag about our SpaceX call because it was about the easiest prediction ever that stock would fall below its IPO price. What's going to happen now?
Well, easy, but you know, Elon does have this ability to get people to pay for potential.
Yeah.
So SpaceX, it is about $115. It's well below its $135 IPO price. It's 50% off its all-time high. It is one of the worst performing IPOs since 2019. A Barron's analysis has found the decline.
And that was a bad time for IPOs.
Yeah, the decline from peak to trough has cost Elon about $650 billion. So let's just take a moment and think about that. So it just hasn't been very good. There are a few issues. One is there's the stock overhang. The insiders who made so much money owning this as a private company aren't allowed to sell yet. They're all coming off lockup over 180 days. That's always an overhang for stocks. They've had trouble getting Starship up into the air. That's a very important product. And it's just, there's never been a trillion-dollar company that trades at 40 or 50 times sales. SpaceX is unique in so many ways. It's also the only trillion-dollar company that's ever traded at 40 or 50 times sales. So
how should investors be thinking about it now? At what point does it become a buy?
I mean, we called it worth 90. I'll stick with that. I mean, it is a wonderful company. Wonderful companies don't always make wonderful stocks. And I'm also going to reference Meta. What does Meta have to do with SpaceX? Absolutely nothing. But Meta fell 50% over its first 4 months, right? So 50%. And investors are a creature of habit. So if you were to get a chance to snap up SpaceX at $65 or $70, that would be a good buy. Morgan Stanley said today at $100, investors are assigning no value for AI. Might be a little overstated, but they do have very good businesses like Starlink.
Sure. Yeah, that probably is the gem, right? Mm-hmm. All right, let's go to Barron's Investor Circle picks. You've got a very old-fashioned concept here, Megan, that people might read books.
I do. Hey, I read books. I like books. No, so the pick this week is Wiley, which is one of the world's largest publishers. They do focus on more of the academic side of things, and that's key for this because, as my colleague Dan Victor points out, they have this vast library, and they're using it to build out AI, actually. So they're doing a licensing deal, many licensing deal of all of that accumulated knowledge. It'll be a good buy and certainly could go up as much as 45%, Dan says.
And I'd rather them scrape textbooks than Reddit.
Yes.
What do you have for us, Josh?
I like Al's pick. So Al says don't buy SpaceX. He says buy their supplier. Taking a look at Applied Aerospace and Defense. That's a company that actually makes money. So if you're worried about SpaceX not making money, but you like the business, their supplier actually is projected to do about $150 million in earnings this year. So it's a profitable way to get at this.
Sort of picks and shovels. It actually might make a decent pair trade. All righty. Megan, Al, Josh, great ideas as always. Thank you. To read more, check out this week's edition at barrons.com. And we'll see you next week on Barron's Roundtable.